Hello and welcome to RAEX Europe update. My name is Marko Nenic. We are here to discuss the scheduled revision of credit ratings of the United States of America and China held on committee on 22nd of November. Therefore, I'm here with responsible expert and associate analyst Gustavo Angel and responsible expert for China, Hector Alvarez. Welcome. Gustavo, what can you tell us? What was the outcome of the Committee for United States of America on 22nd of November?
With this rating action, we decided to maintain the rating of the United States at AAA, the best rating we assigned in our scale. And the idea was that the country in the mid-run will have the strong fundamentals to offset the increased policy uncertainty which surged after the victory of President-elect Donald Trump in the United States. The country has shown significant resilience to external and domestic shocks, while the monetary and fiscal policies have well accommodated to the economic environment. This has also contributed to the assignment to the confirmation of the rating at AAA.
Thank you. Hector, in case of China, what was the outcome of the committee and what are the key factors that brought you to this rating?
Yeah, in the committee that we held, we decided to confirm the ratings at AA- for sovereign government credit and A+ for credit, climate, environment. The main factors or the main strengths of China in order to confirm this rating are mainly two. The first one is the still strong macroeconomic stance. Even though they're doing a rebalancing of the economy in order to make it a bit more a consumption-based economy, they have to give up a bit growth. We know that China was growing at 10% just a few years back. Now they're still growing very strong. The average for this year has been around 6.7%. which is within the target of the central bank, which it's between 6.5–7%. That's a very strong fundamental. Another thing is the price level has been also very stable, around 1.2–1.3%. The price in the average this year, sort of 1.9%. Also, the external position of the country, we consider it, despite the recent outflows of funds from the economy, the pressures which have caused pressures on the yuan, we consider the balance sheet and the external finance of the country very strong. They have around $3.2 trillion, which represents a bit less than 70% of the government debt. They have a huge trade surplus still. We know that the exports and imports have been decreasing, but they still have a surplus. The current account surplus, it's also very high, and we expect it to remain this way. We expect it to narrow a little bit to remain this way for the future and the midterm. So yeah, the fundamentals, the external fundamentals of the economy, external finances, and the macroeconomic stability and also fundamentals of the country were the factors which supported our decision to confirm both ratings.
Thank you. Gustavo, you mentioned the uncertainty that arises from President-elect Donald Trump. Can you tell us more, and together with the combination that Federal Reserve is going to have a meeting in December, where could this drive the credit rating of the United States, and which risk can it pose?
Sure. First of all, the victory of Donald Trump as President of the United States will have some stake in different parts of the government and the corporates overall. On one side, we must mention that the possible reduction of the corporate tax rate from 35% to 15% could harm the revenues of the government in the long run. If we consider that there could be a possible increase in the interest rate of the Fed in the near term, that could also be negative for the country, in the sense that the US government would have to start paying more interests in the long run as well. So we could see at some point an increase in the fiscal deficit of the country, which could trigger a worsening of the fundamentals of the government. As well, another point that it's really important to mention is the trade relationships of the United States with other countries. Donald Trump has mentioned that recently, in some days, that he intends to withdraw from TPP and a possible withdrawal from other trade blocs like NAFTA, for example, could really harm the United States in the long run. Just to put it in some figures, if we consider the trade that the US has with China, with Mexico and with Canada, that these three countries stand for approximately 45% of the overall trade balance of the country. If there is no trade deal, that could be harmed in the sense that the US should have to start negotiating new deals with each of these countries separately. That is not a problem in the long run. That could not be a problem in the short or mid run. But as you may know, these trade deals sometimes they last long years to come up to a result or to a final, and that could be a huge rise, or that could rise the uncertainty further for the United States. And finally, we have the regulation side, that also Donald Trump has decided at some point to replace two old regulations with every new regulation passed by some of the houses. That has some mixed results, or could have some mixed results, because on one side, if the regulation like the Dodd-Frank Act is withdrawn, we could see the financial markets to develop further and to boost the number of instruments that they offer in the market. That could be beneficial for that sector, but in the long run, we have seen, or we can have the risk of going back to a situation closer to the one in 2008, with a world crisis if that triggers. So, in terms of regulation, there is not a very clear outcome on what could happen. What is true is that the markets have already internalized the risk, the long-term risks from both the Fed and the government and the new administration, and this was reflected in the yield curve, which has been increasing since July this year. If you want to read the research report that we have published on this topic, you will see that in our view, the increase in the yield curve from July to October this year was mainly motivated by the fact that the Fed would increase rates, because we are seeing a downgrade we are seeing lower unemployment rates and higher expected inflation rates. But the jump which was one of the highest in the year from October to November, there we can see both effects. The Fed that could increase the interest rate, and the long-term uncertainties that have been already internalized by the markets.
Thank you, Gustavo. Hector, in your view, what are the risks that could triggered the change of rating of China?
Well, as I just mentioned before, I mentioned the key strengths of the economy and the key strengths of the creditworthiness of this country. However, yeah, there are a couple of risks that we have to pay attention to. The main risk, and I think a lot of people know about it, is the credit in the economy. The economy is highly leveraged and it's growing at a very, very high pace. Just this year, the average growth of credit, monthly credit year on year, was around 12%. This is what the government calls the aggregate finance to the real economy, AFRE, which is also called total social financing in other sources. This has grown 12.7% year on year monthly, and the nominal GDP has grown only 7.4%. So we can see the wide gap there. And this could be worrisome in the future. I mean, it's now a bit worrisome and it could be more in the future. Also, I mean, the ratio of banks' assets to GDP was 286% in 2015, and domestic rate to the economy is 196%. These are figures reported by the PBC, by the World Bank, for institutions, and these are official figures, but also there is a big industry in China, the shadow banking industry. A year ago, or a bit more than a year ago, the Chinese authorities tried to curb this shadow banking. This is a very, let's say, dangerous industry because it's hard to account for all of this. Since it is off budget, off balance sheet, it's very hard to account this. So the government was doing strides to do this 1 year back. However, now there are new schemes to do shadow banking. So these start to climb again, and there are many assumptions or many calculations of how big this gap between the on the balance sheet debt and the off balance sheet debt is, and it's pretty wide. So this is one of the key risks that we see in this country. However, one of the things that kind of mitigates the amount of credit and the amount of debt in the government is that first of all, it's almost all domestic and it's denominated in yuan. And the other thing is that also household debt is very low compared to overall debt. I think it's around 40% of GDP. So these are factors which sort of mitigate this part. At the same time, the national saving rate in China, by declining, it's still very high. So this provides liquidity to the banks. I think the loan-to-deposit ratio for the economy is around, it's hiking, but it's around 75-80%. So they still have room there in order to transform these deposits into credit. Another risk that we see is the overheating of the real estate market. The PBC had a loose rate. Right now they sort of switch into a neutral stance, mainly because of with all the pressures on the yuan, they have to sell reserves and this extract liquidity from the market. So in this case, they're not doing anything else to provide liquidity nationwide and economy-wide. They have done things to provide liquidity in the short term with different tools such as repo agreements. Well, the point is that before there was a lot of easing from the central bank, also from the fiscal standard was easing, and this created a lot of investments, a lot of in real estate, and also people started to buy a lot. I mean, if we take a look at the figures, around 42%, there was a 42% increase in October this year from a year ago in regards to sale of new buildings. And there was an increase of more than 12% in newly built homes. So this is the one, both figures are maximums in the last 2 years. So even the government has recognized that this is already at a very high level and could be unsustainable. However, they've acted so far. They've recognized this situation, so they've introduced some measures. For example, they have tightened mortgage standards, they have higher down payment requirements, and they have bans on non-local buyers. So these are some of the things that the government has done in order to curb this. However, we still see it as a risk. Another risk, I would say, is the contingent liabilities. Last year, the government, part of the things that they did is to reduce these LGFVs, which are local government financing vehicles. What they do is that before the government, well, they still have, the local governments have restrictions in order to issue on budget debt. So what they did is they used SPVs, special purpose vehicles, which is what I'm talking about, in order to issue more debt and to finance projects. But also, this kind of debt was really hard to account for and was not in the official balance sheet of the central government. Last year, they swapped, the late governments swapped this kind of debt for official bonds. However, there are signs out there that the local governments are still using this type of vehicles, which is also could be a risk for the government. The debt of the SOEs keeps the state-owned enterprises keeps rising. However, we consider these two, the LGFPs and the debt from SOEs, contingent liabilities. Why? Because there is an implicit guarantee from the government to repay this kind of debt if they go bad. However, recently, the Minister of Finance just said that the investors, when they buy bonds issued by these special purpose vehicles, corporate debt from SOEs, they should take into account that these implicit liabilities are not there anymore. What this means is that the government is more willing to let this type of debt default and make the investor accountable. And we can also see this with the amount of bankruptcies and default companies that have risen so far. I think this year it's around 52% first quarter from a year ago. So we can see that the government is letting a bit grip on this. However, we shall see if they comply or if they continue with this no bailout policy. Because I mean, in case there's a crisis or something, let's see what the central government does. I mean, they can say one thing, but at the end it could be another thing. That's why we still consider this as a risk factor. So yeah, these are the main risks that we see in the country. Like I said, the fundamentals are still okay. Official government debt is low. It's expected to continue to rise because of the fiscal stimulus from the government. However, if you compare it to its peers, let's say the BRIC peers, with the projection of all of them, we still see China as with a lot of room to operate in this sense. So yeah, this would be the main risk that we see in the midterm perspective.
Thank you. Gustavo, you mentioned the risk, the uncertainty that arises in the United States. Can you tell us how actually this risk and this uncertainty can lead to the possible downgrade of the United States?
Yes, well, downgrade of the United States is possible and could be driven by the fact of that just in case the United States withdraw from a key trade blocks. This is very important for us, given that we consider the United States one of the major trade countries in the world. And we have assigned a very strong support factor for it. So in the case this happens, the country would be automatically downgraded to AA+. A second thing that I want to mention is the strong growth that has been explaining much of the rating of the United States and was one of the key drivers of such high rating. As I mentioned, the growth is not only still high, a little bit declining in since some quarters, but still high. And also, but the point here is that we have uncertainty on that topic. We could see at some point, it's not in one of our scenarios, is that the GDP growth, the real GDP growth, could decline up to a point which has no further advantages as a country. So that could also downgrade the rating of the United States to levels still high, but a little bit lower in one or two notches.
Thank you. Hector, at the end, you mentioned the general factors for keeping the rating of China and the risks that could be materialized. Can you tell us in conclusion what's your opinion of these developments in China and how you see the outlook performing?
Yeah, in general, there are several factors which are reaching, let's say, our internal thresholds, which could trigger a downgrade. As actually we mentioned that in our last review, we could take a look at our sensitivity assessment from last time. We can see that these factors are still deteriorating. However, we consider, and this is the main thing, that the government has enough tools, enough flexibility to weather these risks. Obviously, there is a point where this flexibility and these tools are not enough if these risks continue to rise, etc., etc. But for now, we consider that the government has enough tools to mitigate these risks. Again, I mean, if these continue to rise and we see in our internal models and in our internal thresholds they continue to deteriorate, then we could probably have a negative rating action for China. So we will have to wait and see. Also, China is very connected with the United States, so there could be actually some benefits from the withdrawal of the United States from the TPP. I mean, China would be a major participant in the Pacific Rim trade, commercial relationships. So this could be positive for them. They could hold leverage there. This could even strengthen more the external position. So we will have to wait and see how the water sells. But for now, yeah, that would be a conclusion. I think the government has enough tools to kind of mitigate the problem. So far, that's how we see it.
Thank you. I thank you both. And with this, we conclude our RAEX Europe update. For detailed analysis and research report, please visit our website. Thank you.